So Ethereum is facing a moment that what we call a supercycle. So institutions are buying about $1 billion worth of stock every week, used to buy Ethereum spot. But in 2025, it's now Wall Street essentially digitizing or tokenizing the real world. There's only 5% of Bitcoin left. Governments are viewing Bitcoin as a reserve asset. And when governments begin to buy Bitcoin, that's another buyer of Bitcoin that I think is bigger than the halving cycle. So I think that because of institutions and governments, there probably isn't a halving cycle. If you think about that, you only need to have one or two investments make 100 times your money, and then your life is changed forever. And that's what crypto really is. It's an opportunity to bet on a future. But I think that same 100 times kind of opportunity or that massive upside exists with Ethereum today, because it's really one of the blockchains people have chosen to ignore for 5 years. But there's so many good things happening now.
As crypto investors continue to speculate if a price drop is inevitable for Bitcoin and Ethereum in the coming weeks, this crypto cycle is heating up. And Tom Lee remains bullish, with a parabolic rise in the last few months of 2025. Forced selling, leveraged bets, and the usual tug of war we see when an asset approaches such a huge barrier. The bigger picture looks very different though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. Bitcoin's price currently sits just under 115,800, still up almost 4% in the past week. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
I've been involved with crypto since 2017, and that's when we first wrote about recommending clients buy at least a 1% to 2% position in Bitcoin. And Bitcoin was under $1,000 back then, and it's now over 110,000 today. So it's been a 100x return. And this year, I became quite constructive on Ethereum. Because in our view, I think Ethereum is one of the most important macro super cycles for the next 10 to 15 years. And an opportunity came along where I worked with another group called Mosaics. They're good business partners of mine. I've done business with them for about 15 years. And we had an opportunity to create an Ethereum Treasury on an existing company. So this idea really made a lot of sense to us because I think Ethereum is one of the most important sort of super cycle stories for the next 10 to 15 years. And here was a chance to create a company or transform a company in the same way that MicroStrategy did with Bitcoin. I still like Bitcoin, and we still recommend it to clients because Bitcoin is, I think, a ideal store of value. So it's digital gold. But in 2025, there is a much bigger transformation underway because the White House has really pushed two different agendas. The first is the Genius Act, and that's to essentially greenlight stablecoins. And stablecoins are going to grow dramatically. Today, there's about $280 billion of stablecoins outstanding. Treasury Secretary Bessent thinks it's going to get to close to 4 trillion.
Yeah, he is.
So that's exponential growth. And then there's the SEC's Project Crypto, which is encouraging not only for Wall Street to look at digital assets, but to rebuild Wall Street onto the blockchain.
Oh.
Okay. So this is a dramatic moment where the financial system is essentially moving everything onto a digital platform. Wall Street is choosing to do this on Ethereum. So Ethereum is facing a moment that what we call a supercycle, similar to what happened in 1971 when the US dollar went off the gold standard. And that moment is when Wall Street innovated financial products because the dollar became synthetic in 1971. But in 2025, it's now Wall Street essentially digitizing or tokenizing the real world. So Ethereum is unique because, number one, it's the blockchain of choice where Wall Street is building stable coins and tokenized assets. But Ethereum is a proof of stake blockchain. So Ethereum treasury companies actually earn a staking yield. That's why MicroStrategy stock did better than Bitcoin. In August 2020, MicroStrategy stock was $13. Today it's $335. It's gone up by more than 25 times. The price of Bitcoin has gone from 10,000 to 110,000. So it's gone up by 11 times, but MicroStrategy stock's gone up by 25 times. And that's because MicroStrategy, as a treasury company, has grown your Bitcoin per share. And Bitmine is growing your Ethereum held per share every week. It's growing by roughly 50 cents per day. To give you a perspective, the stock was $4.50 when we announced the treasury strategy.
Yeah.
And today the stock's $43. So it's gone up by 10 times. Ethereum has risen by 50% in that period of time. So Bitmine has outperformed Ethereum because you're growing your Ethereum held per share. So if you took the original example,
Yeah.
okay, so let's say on July 8th, you had $4 of Ethereum or $4 worth of Bitmine stock. And then let's say Ethereum went down 50%. The original person only has $2 of Ethereum because they bought it for $4 and it went down 50%. But today, someone has $40 worth of Ethereum, and if it goes down by 50%, it's $20 per share. So you actually made money even though Ethereum fell 50%.
Wow.
So it's a crypto treasury that's properly managed and executed will vastly outperform an ETF or the Ethereum itself. That's why MicroStrategy as a company is larger than any Bitcoin ETF, because institutions realize it's better to buy MicroStrategy than to buy a Bitcoin ETF. But that's really a liquidity framework. And liquidity meaning, buying versus selling. There's a much bigger factor driving liquidity in Bitcoin today. Two drivers. One is institutional investors are buying Bitcoin and crypto. Keep in mind that 95% of all Bitcoin has been mined. But, and this is from Bitwise, they had this really great stat, but 95% of institutional investors don't own Bitcoin. So if you think about that, there's only 5% of Bitcoin left.
Yeah.
And 95% of institutions have to buy that 5%. So you can imagine...
That's surprising.
Yeah, you can imagine that will cause an asymptotic rise in Bitcoin's price.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
Ethereum's very unique because it is a smart contract platform. You know, it's 100% uptime since creation. It's never been down. And to build a treasury business on Ethereum means that a company, when they acquire a sufficient stake, let's say 5% of the supply, actually has what I call the power law come into effect. And that means that not only do you have a positive influence on yourself as a company because you own so much, just like MicroStrategy, but you have a positive impact on the Ethereum ecosystem itself because, one, you're providing a lot of security by staking, but also you are essentially what you call like a kingmaker, that when you own so much Ethereum that you have a chance to help the DeFi ecosystem flourish. And that means if Wall Street's going to build on Ethereum, a company like BitMine will actually play a role in helping, you know, sort of evolve and identify the right DeFi protocols. But BitMine itself was what I'd call a company that was a suitable candidate to transform because they had an existing Bitcoin mining business. And they had a very clean balance sheet, only a very nominal amount of debt, about $1 million. But the transformation was really led by myself and Mosaic. So we brought in Founders Fund, Stan Druckenmiller, Galaxy Digital, DCG, Kraken, Falcon X.
Wow.
Also that joined us in this effort is Kathy Wood's ARK Funds and Bill Miller. And so we've been able to raise a lot of capital into BitMine.
Oh.
And that's how BitMine's become now clearly the largest Ethereum treasury, about 9 billion of Ethereum held. So it's dramatically almost 3 times larger than the second largest now.
Yeah.
And in terms of global crypto treasuries, only MicroStrategy is bigger, with about $72 billion worth of crypto. So BitMine is the second largest crypto treasury company in the world. So institutions are buying about $1 billion worth of stock every week. Is used to buy Ethereum spot. So just buying the Ethereum token. There are 3 or 4 exchanges that are executing the trades for BitMine. So the purchases are being made, in conjunction with crypto exchanges buying Ethereum for us, and then it's held in custody. Because a traditional investor may go into a crypto exchange and then just buy spot.
Yeah.
But if you're buying $9 billion worth of Ethereum, you can't buy it straight because then the price would just go to the moon.
Hops.
Yeah. So it's important to buy Ethereum when there is liquidity. There's more money lost worrying about a top in the cycle than in buying good ideas.
Oh.
Okay? Meaning, if you're worried about a cycle top, you're missing out on all the upside. So it's better to actually own it for the long term. And I'll give you an example. In Bitcoin's case, as you know, since 2010 or 2009, so now we have 16 years, you've never lost money owning Bitcoin if you held it for 36 months. Wow. So even if you have a downturn, as long as you own Bitcoin for 3 years, you'll never lose money. So maybe that's more important than worrying about a downturn.
Yeah, because it's hard to actually hold on for a long time.
Yes.
When you see it going down.
Yeah, for instance, when we first read about Bitcoin and it was under 1,000, it went to 20, and then it went to 15.
Wow.
And then it went, I think, to 50, and then it went to 13, and then it went to 120.
Wow,
So
that's like a really big
yeah,
fluctuation.
but over that period of time, you made 100 times your money.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology, and if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.